Today we're going to talk about 3 things you need to ask your lender when you get pre-approved. So some of you may know this, but one of the reasons I'm a lender is because when I bought my first house, I asked no questions. And because of that, I ended up house poor. And house poor is horrible. And we'll do a video about that and what it means. But had I known to ask these 3 questions, had my husband at the time known to ask these 3 questions, we could have avoided a really bad situation. So I'm going to share with you the 3 questions to ask your lender anytime you're getting pre-approved. I am always horrified. No lenders, very few lenders give up this information freely, and I think it's because it leads to more explanation, right? So I would say with every single client we have, either myself or someone on my team is spending at least an hour going over these things. So let's talk about it. Number 1. Okay, they give you your pre-approval. Hey, Betsy, you're qualified for $400,000. Thank you. Here's your questions. Okay, great. What type of loan is that? What type of loan, right? Because sometimes people don't know if they're being put into a conventional loan, if it's an FHA loan, what type of loan are you doing? Okay, I'm thinking about this now. It's gonna be more than 3 questions. So what type of loan is it? And if they go, oh, it's FHA. Okay, why did you do FHA instead of conventional? And check out my video, conventional versus FHA. So you want to know what loan program you're in and why the lender chose it for you. And are there other options that should be considered? Question mark. Yeah, okay, just going, oh, $400K, cool, awesome. No, what type of loan are you in? Because there's big differences, and sometimes lenders don't put people in the best program for them. They put it in the best program to line their pockets. So you got to watch out for that. Okay, number 2. Okay, great. What is my debt to income, my front end, and my back end ratio? And they'll probably be a little caught off guard when you ask that, but it's very important. And I do also have a video on how to calculate your front end and back end ratio. I swear I did not realize this video would be a commercial for other videos, but now it is. Okay, so the front end ratio is your gross income, so before taxes versus the housing payment. The back end ratio is your gross income versus the new housing payment and anything on your credit report. Now, VA also would have childcare, but that's the only loan that puts childcare and debt to income. So realistically, and I would say personally, whenever people are pushing above 43, 45% on the back end with debt to income, I have the house poor conversation every time. Okay, and if your front end, if your housing cost is 50% of your gross income, that's not good, right? That's not good. So if you're 50% on the front and 60% on the back, you're gonna have a really horrible time with this house. This is not gonna be good. Unless there's some sort of income I'm not using, you are setting yourself up for failure. So I won't structure loans that way because it's not the right thing to do. And sometimes people get very angry at me. They're like, well, but I want more. Cool. You know what? Go to another lender, please. Go to another lender. If you want to do a 60% debt to income, if you want to do some exotic loan so that you can make it so you can't pay for cable or food, go to another lender. Okay? I'm going to stay within realistic guidelines and make it so that you can eat. Go figure, right? So you want to ask this question, and if someone says, oh, and delivery is important on this, so if someone goes, oh yeah, your debt to income 60%, and there's not a lot of loans you can do that with, but you can do it with VA. VA, you can easily get a 60% through, 50, 55, sure. And if they're like, oh, it's at 50%, and nothing else, you should be like, well, should I be concerned about that? No, don't worry. No, worry. Guys, seriously, let's keep that back end under 45%, okay? Really, the lower you can have these ratios, the better life you will have. And I know it's so expensive now everywhere in the country that we're seeing much higher debt to incomes because everyone's trying to get in, and rent's just as expensive. So it's not like you're actually spending more by buying because of how expensive rent is. But at the same point, if you have the option, if you have the ability, always go for the lower debt to income, okay? Seriously. Let's see here, what else? Oh, can I see a loan summary? That one we hit a lot. So I always send out a loan summary, or someone from my team does, and we go through it. And the thing about a loan summary is these are not set in stone yet. Until you're in contract, a lender's not gonna lock you. We also don't know what title and escrow or attorney fees are, but what we can do is we can estimate to the best of our ability what fees and costs you should expect with closing a loan. And I do that on every single loan. And usually my estimates are high. And the reason I estimate higher is because I don't want you to be crying when you get into contract because you're $2,000 short. There's a lot of lenders throughout the country that A, don't send these, or B, when they do it really low because they're scared they'll lose your business, but they're setting you up for disaster. So you really want a lender who's giving you a loan summary, walking you through, hey, this is a real fee. This is what we're estimating. You know, this can change based on the timing of your close. I actually think I might do a video going through a loan estimate. I just have to figure out how to do it without having client information on it. So working on that. But you want someone who will go through a loan summary with you. Now, some people are like, well, what about the official loan estimate? You don't get that till you're in contract. So you're not gonna have an official loan estimate until you're in contract. A lender's gonna be giving you a loan summary or a closing cost worksheet. We're not gonna be locking your rate. And look, this video is filmed in April 2021, and this could change because as of this moment in time, we're not seeing a lot of lock and shop programs. If the market continues to trend upwards, then we'll see some lock and shop programs, which means you can lock your rate while you shop for a house. But as of this very moment in time, I do not have it. This could change. Okay, so you want someone who will take the time to go through the loan summary with you, and you want to make sure you're comfortable with it. Also, most important, and this is how I got burned and ended up house poor for a couple of years. What is my monthly payment, including taxes and insurance? Yeah, get the whole monthly payment. And look, I know there's a couple people watching this going, how did you not ask that? Okay, I was 26. Okay, you're 26, you're not stupid. How did you not? Lender said we were qualified, guys. I wasn't in mortgages, I didn't know. So many people just go, oh, well, if the lender says I qualify then, so it doesn't matter. I'm sure, you know, the payment will be easy. They wouldn't qualify me for something I couldn't afford, right? Wrong. Wrong, guys, wrong. Because here's the thing, lenders are looking at an isolated snapshot of your financial picture. And if you're not VA, they don't know about childcare costs. And as a mom, we mamas know childcare costs is crazy. It's so expensive. So it's like a lender may max qualify you based on the income on your income and your credit report and all of that, but they're not taking into consideration the $500 or $1,000 a month you're paying in childcare, and that can make you house poor. So it's very important that you ask the lender, okay, based on this pre-approval, what monthly payment should I expect? And this isn't gonna be to the dollar right now, right? We don't know the house, so we don't know how much the insurance is gonna be. We don't know what the taxes are gonna be. We can ballpark it, and we don't have the exact rate, but once again, we can give you, as of today, what is your principal and interest to expect, okay? And then what you guys need to do with that information is you need to look at a budget. And I know people hate budgets, they hate it. But my goodness, go on mint.com. I love that website. It's free. It will help you do a budget because you want to make sure that when you move into this house and you make that first payment, you're not crying, okay? Or you're not going, oh my God, what are we gonna do? What are we gonna do? I gotta go back to work. What are we gonna do, right? You don't want a house to force you to make certain decisions, right? A house is a roof over your head. It should be a benefit, not a burden. And if you ask these questions that we just talked about, if you do a budget with the new expected monthly payment, then you should be in a good position when you buy a house. You don't wanna end up house poor. So thank you for watching. As always, I am licensed to do loans in 46 states. I love doing loans, clearly. It is my passion. I want to help you. My team wants to help you. So please reach out. We'd love to talk. Thanks for watching.